So I was not recording, but it's okay. So so the second class is on structure, and these are the few things we'll look at. Um, and the first structure, this is under market structure, is the uptrend. So this is how it looks. We will go back to the charts and check how it actually looks. So in an uptrend, we are trying to buy. You remember the instance of the phone, the potatoes, and everything. We are trying to buy when it is cheap. So the first one is a low. Okay? Nothing technical. A low, which is signified by L. Okay? This one here, low. This is the first one. Then we go to a high. So the market goes higher than the initial price. So this is the high. Okay, we're together up to there. I hope so. That's the high. Then now higher low and higher high. Now that's, I know that's probably a bit of Greek to some of us, but what I mean is this is higher low. Let me just do that. Control C. 1, 2, 3, 4, 5. Okay. Uh, so just a minute. Okay. Then the other one is higher high. I'll just explain this in a minute, what it means for, it's nothing technical by the way. Higher high. So we'll copy this and make duplicates. That one goes there. That one goes there. That one goes there. Okay, so what happens is the price begins from a low. Okay, then it creates a high. Then it creates a low that is higher than this one, the previous low. So that's why it's called a higher low. It's higher than the previous low. Then it gives us another high, which is higher than this high. So it becomes higher high, then higher low. Unmute, we continue. Higher high, then higher high, and so on. So that's just the first thing to look for in an upward or yes market. So the other thing, the other market, kind of market we will just look at for today is a downtrend market. So we begin from the high, uh, and then we go there, and then we come here, 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 and then it gives us this, and then this, and then this. Okay, so let me just exit that. So this is how it looks. So everything is the same, it's just that now it's going down. So the name of this market is, somebody can unmute before I type and tell us. Bearish or selling or or downtrend. Downtrend. So it is the opposite of this, but now you see how here we began with high. Now here we will begin with lows. I'll just write this again. I think I'll just write this list again of our definition. So we begin with a high. The market has bought so much, so we are expecting it to start going down. So it's at its peak, it's at its high. Then this is H. Then we go to low. Then we go to lower low. Okay, and then lower high. I hope you're together up to there. So what this means is, let me just copy this. And then this one is high. Then now we begin. We begin with high. Let me just move this here. So price gives us a lower low, okay? Then it came and gave us a lower high. I hope I am not losing us. Lower high, okay? I'm not losing anyone. So let's see, 1, 2, and 3. Then this one gives us that one, that one. Okay, that one is not there. So what this means is price began with, oh, sorry about this. This is an error. Began with a high, right? Price began with a high, then it gave us this, gave us a low. Then it gave us a lower high. This low, this point is lower than this high. Then it gave us a lower low, meaning this low is lower than the previous low. Then it gave us a lower high, meaning this low is higher than the previous high. Lower high, lower low, lower high, lower low. Okay, let's drop some emoji, something in the chat if you're following. Um, if you're not understanding, we can also comment on that. We can also unmute and just say what. Yes. Any comment, anything? Komodo said yeah. Are you following? Are you, is it yeah? Okay, this was a while back, but yeah. Any comment, any feedback so far? Are we together? Did I lose us? Okay, we're together. Uh-huh. Some more comments. Okay. I think that's okay. We can ask the questions later. I know this will have a lot of questions, but yeah. So that's now. This is what we try and trade. These are the two structures that we focus on trading. Okay, but there's another kind of. Let me just do this. Allow me to do that. There's another kind of market that's called a consolidated market. So market is not, you're not sure if the market is buying or if the market is selling. Uh, okay, that will not work. Uh-huh. So we're not sure if the market is buying or the market is selling. So what you'll find the market doing is something like this. Okay, let me just go back. Kidogo. Let me let me try that again. So market will give us something like this. Will give us something like this, then something else like that, then something else like this, and then it will come back here, then give us that, then give us this, then give us this, then give us this, and then give us this, then give us this. So what you'll notice is the market is enclosed here. Let me, the market is enclosed in here. It does not break this region or this region. So some traders use this to call it support and resistance, but I do not trade this. I trade a strategy called smart money. We will get to know what that is tomorrow. So this is that kind of structure. So the first one was this one, uh, the uptrend. Then we went to the downtrend. Where's the downtrend? The downtrend vanished, man. Oh, okay. Then we went to the downtrend. Then this is the third one. This one. It's messed up kidogo, but yeah, this one is the consolidated market, or ranging or choppy. People have different names for it. So that's to do with structure. So um, just know that it's just explaining what I was building on with candles. That when the market is just a little bit, when the market is buying is in an uptrend, never sell, just look for buys. Then when the market is on a downtrend, don't look for sales, don't look for buys, let's look for sales, capitalize. So what happens is we try to buy from these low regions, because for example, if you bought how do I put this, if let's say this is 0, this is 50, then I don't know if I'm losing anyone, but yes. So this is 0, this is 50, this is 20, and this is 100, for example. So this is 50, this is 100, this is 0, this is 20. So if we buy from here, if price reaches, comes back, we will have made 100 minus 50, okay, which is 50. But now if we wait for price to come to this area and be able to take price all the way, we will have made 100 minus 20. So we try to buy when price is low and sell when price is high. Even though the price is buying in this trend, the goal is not just to buy, but to ensure that our buys are meaningful, because then we will be more profitable. It makes sense, I hope. So yeah, that is that. We can look for structure uh, in this asset. It's called VIX25. It's an asset that I have been trading for a while. It's a nice asset. So let me change the time frame to probably. So there are things called time frames also. Um, there's time zone, then there's time frame. So it's really not cooperating. Let me just use the daily to give us a perspective of what I am saying and meaning. So yeah, so we can try and do a few markups on what we have been doing. So in an uptrend, remember, we're looking for higher highs and higher lows. So price was at a low, then price gave us a high, then price came back and gave us a low, then price gave us a high, then price came and gave us a low, then price gave us a high, a low, a high, a low, a high. We will begin to see these things with time after our eyes have become trained. Then when the market was selling here, for example, there was this high, price gave us a low, then price gave us a high, then price gave us a low, price gave us a high, price gave us a low, price gave us a high, price gave us a low, price gave us a high, price gave us a low. So that's now looking at the charts, how what we have done here is playing out. It's not picture perfect, it's not as, as this, but that's what actually happens here. So, hi guys, you still there? Yeah, let's keep at it. Do we continue? Have to uh give me just give me 20 minutes of your time and we will be closing up on this. So I hope you're together. You've seen how it's playing out even in the live chat. The lower low and the lower high and the lower low and the lower high, and the vice versa for an uptrend. So the other thing we will look at, so we will go to the break of structure. This point. Let me just get rid of this. Let me get rid of this, guys. So the second thing we look at is the break of structure, okay? So okay, let me do this. Let me do this. Let me do this. Let me try and move these ones here. Okay, it's not working. Sorry about that. Let me just see if I want to send this photo in the group. I want to send this snippet in the group, in the group, in the group. So share, copy link. Just give me a minute. So this is the consolidated market. Yeah, let me see if I can share this. Copy link to chart and share it here for our reference. Paste. Market structure. In case you need to refer to that, it's in the group. And then I'll also share this. The difference between the two. This one, let me just highlight that for us. This one, okay, and this one, these two. Let me put this as okay. Let me put this color as something else for the difference. We'll do pink. So I'll also share this. Just give me a minute for reference and for us to be able to even revise and have follow-ups of the same. So yeah, so both are market structure and how what we have taught is actually playing out. So now the second thing is knowing when the market is, which is now the break of structure as written here. What means is the market is changing from the buy to a sell or from a sell to a buy. So what happens is, let me just let me refresh this because I'm done with that. So that we have a new a new work area. Uh, so the break of structure now. Wish I had copied that. But anyway, so the other thing we'll focus is the break of structure. Let me just write that. Break of structure. It's a break of structure or the BOS. Okay. So what this means is market is moving from a buy to a sell or from a sell to a buy. Simple. Just forget the break of structure. Okay, it's important because now the structure is breaking. But just a minute, just a minute, just a minute. This one. So let's say you remember our uptrend. Low, high. Okay, remember? So if we can try to check what has been happening, price has always no price has not closed in this one. Price has not closed before the previous low. Price began here. This low was higher than this low. Then this low was higher than this low. Then this low was higher than this low. But now what happens? There are times that now this will happen. Price will come, close below this low, this one, okay? Give us this, and then start selling down. So price was initially buying, but now there is a break of structure. There is a break of structure. So price changed from a buy to a sell here. Then it came back and then it began going down. So this is one of the break of structure. And this can also happen in an upward market. I don't know if I just continue. So price reached here. Then price, okay, that will just probably confuse us kidogo. Okay, so price was selling, okay? Remember? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then for this one reason, price closed above the previous low, okay? And came back to this point and then continued buying upward. So also at this other region here, price did what? Price broke structure again. So every time in an uptrend market, price should just a bit. Let me just admit. Okay. Welcome, Ibrahim. So every time price should never close in when the market is buying, price should never close below the previous low. If that happens, then the market is giving us a signal or is telling us that price might be shifting to the downside in the same way. So this is in a buying a break of structure in a buying market, and this is a break of structure in a selling market, in a market that sellers are more. So an example here, for example, we can just do again the markup. I don't get tired. But don't worry, these things will come with time. You'll just begin to see them. Then price gave us this one. So this here, we don't have structure here. The reason why we don't have structure here is this one did not close below this one. So after this was, do you remember the consolidated market or the ranging market? So we had a ranging market here. The structure is not clear. So this was the next low. Then price gave us this. Then price gave us that. Then price gave us this. Then price gave us this one. And then price gave us this one. Then price gave us this. Am I so sure? And then for this one time, price broke the structure to the upside. I don't know. Are these two similar? Guys, we had this, then 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 we had a lower low, lower high, lower low, then price closed above the previous low. Okay? So exactly what happened, this is just a pictorial kind of a thing, but this is exactly what happened here. We had a high, low, high, low. Can actually play with these things. High, low, high, low, high, low. So when we are looking at structure, write this, note better, NB, we look at the candle closure. In that time frame that we are checking, we look at the candle. There's something I forgot to mention, parts of the candle. We have this part, this, you see this stick, this one, it's called a wick. So we are looking for the candle body, where the candle body opened or closed. So when we are looking at structure, we do not look at the wick. We do not look at the wick, we look at the structure. There are things we can do to help us as we are trying to train our eyes to see. We can, when you come here to this bars, you can change this bars to a number of things, but for structure, we can change it to this. So the line graph helps us to know where structure is. Okay, so that was that. Then this gave us, so this is where it's supposed to be, and so on and so forth. So in structure, we are looking at the candle body, not the wick. We can write that. We are focusing on the candle body, not the wick. Um, so yeah, and this is the candle body. This is the candle body, this solid or this solid. Then these are the wick, these ones. Let me go back and show us. Um, you can play with what you want. For example, this is a hollow one. I prefer this one. Oh, that's full. So, uh, for example, this one. You see these sticks. These sticks are the wicks. So we are focusing on the candle body, not the wick. All right? Are we together? Okay. So yeah, that one is that. That's the second one. I don't know if I need to send this to the group, but let me just share. Uh, for our reference. I know it's a bit late. I'm just left with one thing. Then we're out of here for tomorrow. You can watch the videos even after the boot camp. You can reach out to me. I will be willing to assist. So we will refresh this for now. And we're left with the range, and we're done. 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 So we go back to our tool. the path. So this is the range. Let me just, it's just the same thing, but now different, other different aspects. Okay. Uh, so range is from a low to a high. That's basically it. Somebody wants to join. Karibu, karibu. Uh, admit, admit, admit. Welcome, Veron. So let me. Just allow me to do that. Just a minute. I'm trying to. The mouse is playing games with me. Delete. Then that one there. That one there. Okay. So the range is just this move, or this down move, or this up move. So I don't know how to explain what a range is, but it's just from a swing low to a swing high. From where it began buying, okay, that's easier, to where it will begin to sell down. Because although we are buying, there is this retracement. Like, so it's like when you're pushing a car. So you push a car up a hill, then you get tired, it goes back, then you go again. So that's what's happening technically. So yeah, that's the
How do
range.
you know? I'm monitoring.
That's that's now about the range.
Don't let me
Kindly,
I'm running 45 right now.
hello.
Oh, no, I'm not covering. I don't keep. Covering that. Ni kalau orang kau ni kalau kan. Oh, kau ni kahit dia kita apa? Kau
Don't know. Can I mute? Hi, Chris, kindly mute yourself. Chris, thanks. So yes. So and here the same way we were looking at now the difference between a range and what are we calling it? A range and structure is now for the range we look at the week. Remember for structure we don't focus at the week. We focus at the candle body. But now for the range, we will focus on the wicks. So from here, for example, this is a range in a downtrend market. There to here, that's one. To this final week, that's a range. Okay, that's just an example. Then we also have this. Price give us this. Okay. Then the next one was this one. No, that's messed up. That is messed up. Okay, that's okay. So let me show you something. Okay. So this is one range, this one. Then this one, this is wrong. Sorry about that. Then price gave us this. This one is the second range. Then this one is the third one. Yeah, this is the third range from here to here. I think I should give these things different colors. What do you think, guys? Let's put that as yellow. This one can remain like that for the difference. Then this one can be that color, so that you should have the difference of what it is. So this is the first range, this is the second range, this one is the third range, then this one is the fourth range. So that's about ranges. Then the last thing, I know you have 15 minutes to go, but kindly we'll give it a few minutes for asking question. The last thing that we use is called a Fibonacci tool. This is to help us know, or we can do this tomorrow, to help us know where to buy and where to sell. Okay, so let me look for a Fibonacci retracement. So there are a few settings that we use. So there's a lot of things that I know are here, but just when you're setting up, just leave the following: the 1, the 0.6, that one, and these two. So we have the 1, the 50, the 0, and these two. So that it won't be so crowded. So every time that we want to buy, this is something you need to write down like an NB or a note beta. Every time we look to buy or sell, we should ensure that if we are, for example here, price broke structure, I'm assuming on a certain time frame, and then it came back and retested. So if you're taking the sell, we need to take it above this 50%. And if it's the buying, it's the other way around. I'll go to the details tomorrow, but that's just an introduction. And now from tomorrow, we'll begin now looking at now trading itself. This was just an introductory on things we'll be looking at, but we'll just be beginning with these things. You'll see how we'll use this, and now also look at other few things and bring them together. With the, you remember when I beginning the class, the higher time frame, point of interest. Then, for example, now looking at why did market turn from here, or why did market turn from here? Things like those. Why did market turn from this point? And why did market turn from this point and come down? Why did market turn from this point and come to this point, or turn from this point and come downward? So we will look at now those points of interest moving tomorrow. So that's it for today's class. I will stop sharing my screen as of now, and we can ask question. And also, yeah, thanks guys for staying up until now. Yeah, it's much appreciated. Thanks. Hello? Guys left. Okay. I think we can continue with our communications in tomorrow class. Cheers, guys, and have a lovely night. Unless we have any questions? For those of us left on call. Any questions? Derek, Angela, Veron, Julius?
Joshua,
Yes?
I think I have, okay, it's not a dumb question, but let me just ask since it's introduction and I can ask any questions.
Okay. Go ahead.
My question is,
Mm-hmm.
yes, in every market we experience losses.
Okay.
how are losses experienced in marketing in the trading in the forex trading, like okay the losses like complete loss when in particular
Uh-huh.
are you on a complete loss? Yes.
Uh,
Okay.
there are a few things we look at, even risk management. There's something called a stop loss where you can predetermine. It takes discipline and a lot of things, but you can lose all your money. I think that's a disclaimer that I need to make. We can actually lose all the money we invest. So there are measures that have been set on how to, for example, the market will not always respect structure. There are times that the market will just do its own thing. So we can be anticipating to buy, for example, but now, because probably of the issues, even with the influence with now wars and things like that, the market is affected and itself. So there's there are tools that have been set in place that will help us to reduce our losses. But yes, thanks for that. You will make losses in the market, but now you just make calculated risks. You remember where there is risk, there is reward. So if you risk, there is the tendency that we might actually lose. But there are ways we can calculate the amount of, let's say, dollars we're risking, even compared to the
Mm.
reward we will get. So there are losses, it's guaranteed. We will take losses. But now having a strategy on how l- let's say you have an account, whatever amount of money, and you are risking just 1% per trade. That means you will have to take 100 trades, consistently losing, for you to it's called blowing the account, for you to not have money in your account. So if you're able to risk an amount that's 1% or lower in our account, then it is possible for us to stay longer in the market, to learn. And there are some that, so for example, let me just, I don't know if um I can explain just this even as we go to sleep. Share screen, share. I am looking for the notes. Is my screen visible?
Mm, mm, mm.
Can you see anything?
Yes, it is.
Okay.
Yes.
Uh, just a minute. Okay. So, assuming we have an account, let's say, okay, I know this is a lot of money, but anyway, 1,000 US dollars. Okay. So, out of our trading is not like education or normal working. You can actually be right 50 to 60% of the time and still be profitable. So let me use 60%. So 60% of the times that we take a trade, just a minute. Um, okay, that's a good example. Let's say in a week or in a month, we take 10 trades, okay? Out of these 10 trades, 4 of the trades are wrong, okay? 2 of the trades give us a break even, like we don't make any loss, we don't make any profit, break even. Then the remaining 4 give us profit. Now, this is now, I hadn't planned for this material. Let me just touch on it. So this one's give us profit. In every trade, we were looking for profit. In every trade, we were risking 1%, okay? Are we together? In every trade, we are risking 1%. So and we are looking to make at the least, we are making to make 3%. All right, 3%. It's called risk to reward. It's written as this: R is to R of 1 is to 3. Okay, so every time we risk 1%, we are targeting 3%. With it's not betting. There are things we look at, like there are things that tell us, okay, now buy. So every time we are risking 1%, we make 3%. Okay, so back to this. So we were wrong 4 times. So we are down to minus, Angela, minus 4%. All right, because we are wrong 4%, 4 times,
Yeah.
and we are
Yes.
risking 1% per trade. So it's minus 4%. Okay, break even means we didn't gain anything. So we got 0. Okay, then the number of times we profited, which was less than half anyway, the number of times we were right, like the trades actually played out as we predicted. We targeted at least some trades can actually give even a 1 is to can be better for okay, I'll just go to the details tomorrow, but can give you more than this, but let's use this as a minimum. So we will have 4 times 3%. So the total will give us 12%. uh 12%. So our overall change in the account, and mind you, we have just been profitable 40% of the time. For 60%, technically, we even the break even, we were wrong. It's just that we didn't make loss. Okay?
Perfect.
Even if we were wrong 6 times, okay, let's just do this. So it's 12 minus 4.
Yeah.
Okay? So our account is up by
Good time.
8.
Mhm.
By 8%. Okay? So if this was our account, if this was our account, this is the amount. So 8% of this
Yeah.
is $80. So in a month or in a week, depending, at least you're guaranteed you will get this amount. So trading is probability. It's just a game of probability, but now it's calculated. There is risk. You plan before you take your trade. You actually plan it because it might not go as. So if we don't now, there are things that we call stop loss. So before every trade, you know that I am risking, let's say, 1,000 Kenya shillings or whatever, $10, 1,400 Kenya shillings in every trade. But you know that yes, so given this, so we will make losses, but overall, even if we lost, even this one was, let's say, we lost this one. So this was also minus 2%. So we will still be up by 6%. So it's not like you see, let's say you are an accountant or you're a doctor, it's different. Even the mindset, we need to study books. I have some suggestions that I can give. You can remind me to share, but there are books you can read to try and change because how we have been cultured by life and even the education system that we've been through. Education is amazing. Please don't keep learning. Yeah, keep studying. It's just amazing. But how it is, it's different in the sense that if you are a doctor, assuming patients come to your hospital, you have 10 patients per week, and for 6, you are wrong, you'll be fired. Assuming you are an accountant in a bank, every time you count money, every every 10 clients that come, 6 of them you are wrong, you'll be fired. So for trading it's a bit different because now it's not about being right, it's about knowing the risk and sticking to the plan and maintaining a good state of mind, mental balance and all that. But we can be wrong more than half of the time and still be profitable in trading. Okay, so that's probably a disclaimer, but there are books you need to study. There's a lot of things you need to listen to. I know motivation speaking is bashed, but now when it comes to trading, you need to listen to things that transform the mind and Yeah, and just because it's a lot, you have to get rid of now those things. If even in in primary or secondary, if you are right 4% or 40% of the time, if you got a 40% in mathematics, you will be called a failure. But now when it comes to trading, because of risk management, there are losses we'll make and there are losses that we'll take. But there's something that I had. If you learn how to lose properly, you see this 1%. If you learn how to lose properly, then you're setting up yourself up to be profitable forever because of now this. You see this 8%. And if your account is big, the better. There are things we'll talk about even as time goes. If you have the skill, believe me, right now I'm pursuing something else. It's called prop farm trading. So you pay some amount when you believe you have the skills, and once you have traded with your small money, you you pay. It's like a commitment fee. So these big banks and these big people who have money, they give you their money for you to trade for them. And then there's a profit split. So you can get that you're trading an account that's worth 10,000 US dollars and you paid for $99. Then you did an evaluation. So what they want to do is make sure that the people they're giving this money, they are sure that they are sure that they are sure that yeah. So I don't know. We will yeah. So thanks guys. Any other question? But yeah, it's risking, but now just not just risking. Like you're not just taking. Most people when you're starting out, you just think you'll put money and get it tomorrow, but it takes time, it takes work, and don't enter today and expect to start making money next week. Even when you study your course, I did finance and banking. But for most people, you study 4 years. Then, for some, there is exceptions. But you study, then you start looking for a job. Some people take 2 years. So you give yourself like 6 years. Then you come to trading and you're thinking, I will fund my account today and tomorrow I'll make money. That's not how it works. So with proper risk management, we will make losses. Everyone takes losses, even the best of the best traders. Let no one lie to you. It's just that now they have learned how to we have learned how to lose properly and to yeah, so that's it guys. Thanks for staying and for the emoji. Yeah. So once yeah, I'm seeing yeah. I will touch base tomorrow. I know people are tired. In case I think we can ask more questions tomorrow as we have the boot camp. Uh, Let me just write those few things in the group. Once you, once you, once my electricity also went. So I think we are a number of you who are affected. Once you learn to lose properly, then you will have set yourself to win forever. So that's just our takeaway from everything. Uh, yeah, I'm seeing Julia's Kitoni is saying in the group that we have a blackout. So, Sasa, thanks Derek, thanks Kimondo, thanks Ignatius. I think I know Ignatius. I'm not sure, but asante sana. We'll have the same session tomorrow. But then on Sunday is when now we will actually bring everything that we've studied together and start looking at it from a different angle. So thanks guys, and wishing us all the best. Hello? Hello?